I'm very active on Twitter, and every single day I see people posting about an upcoming housing crash. Guys, my personal opinion, and it's not based on any sort of real facts other than the way things feel, is I don't believe there's a crash coming. And here's why. First off, Case Shiller just came out today. Home prices hit another record, 6.6% above last year's January, 0.1% gain from December to January. Now let's go look at these major markets to start with, okay? So you've got some big gains here. Portland was the worst one at 0.9%. Our home, Cleveland, 6.9%, which is kind of funny because people call Cleveland dead. Now, here's the interesting part also. Chicago, 8% increase. If you go look at the population data, Chicago, Cleveland, LA, big cities like that are losing people over the last couple of years. In other big cities like LA and Chicago, it's mostly because of housing costs, actually. The cost to live is just getting too expensive. So then you might wonder, what's driving the housing prices? Because you're sitting there saying, wait, interest rates just 2.5 years ago, were sub 3%. Now they're at 7% or more. Of course. But let's look at this. This is housing inventory. Now, this housing inventory data only goes back to 2016, but look at it. About 1.5 million, almost 1.5 million houses for sale back then. We hit a low in January of 2022 of a little under 400,000. We're definitely higher than that now, but still only about 700,000, a little under 700,000 houses for sale in this country currently. Now, remember, there are two sides to the equation, supply and demand. If you have too much supply, it doesn't matter. If you had population growth, if you had income growth, but let's go to an extreme, make it 10 million houses for sale. What would happen? House prices would fall. You look at a city like Youngstown, Ohio, where one of our producers are from 1980 to today, they've basically lost half their population. But home prices have still gone up considerably. Why? Well, guys, supply and demand, as well as the devaluation of the dollar, better known as inflation. And that's what I keep talking about here when it comes to housing prices. In 1975, interest rates were about 9%. In 1984, they were about 13.5%. Okay, that's an increase, about 50%. But where did home prices go? In 1975, the average home was $32,000. In 1984, the average home was about $82,000. Why? Inflation. Why were interest rates so high? They were fighting inflation. Inflation makes wages go up, makes costs of goods go up. So if you have a house and you paid $250,000 for it, and 5 years later, the same cost to build that house, hypothetically $500,000, is your house worth $200,000 anymore? Of course not. Is it worth $500,000? Maybe not, because it's older, needs some more modifications. But is it worth $400 all day? I would guess so. So it's not just about the demand part. It's also about the supply part. When the supply of building homes goes up, the cost to build goes up, you're going to see an increase in prices. That's just the way it works, because you still have to hire people to go in there and build the home. You still have to buy the products. Lumber, if you remember, was skyrocketing in price for a while, having major fluctuations. That's a big driver of home prices. Why? Because it costs a lot to build. Now, the other reason I don't believe we're going to have a crash is we don't see the fraud and the loose standards of 2006, 7, and 8. Even before then, I mean, people, you've heard the stories thousands and thousands of times. You've watched the movie The Big Short. Literally, no income verification was needed. You could walk in and say, hey, I want a loan, and they'd give you a loan on a 3-month term, on a 3-month interest rate lock, and then your rate would skyrocket. You'd see fraud all day long. That's not occurring today. I don't sit there and see people getting away with not being able to verify their income. That's a very big difference from back then. Now, the great news about real estate is the emotional up and downs aren't there as much. You don't sit there and see you see the stock market every single day going like this, right? Over long periods of time, it can go like this. When you have your home, there's no marker on top of your house saying, this is what your house is worth. Yeah, there's Zillow, there's things like that. But the big focus we have in investing is about the emotional aspect. Warren Buffett has said, I love this quote of him. He says, until you're able to handle your emotions, you should not be handling money. That's very important, because I'm sitting there and preaching more and more on this channel that it's about the emotional fortitude to be able to sit there and see the fluctuations. With real estate, it's much easier because you also have a second use for that real estate. You live there. You're in your home. You're sitting there, you're building a family through there. You have this ownership love for your home. That's very important in this aspect. When it comes to investing, it's important to be around like-minded individuals because we're always going to get to everybody's going to get to the point where they make a bad decision because of emotion. Warren Buffett's done it. I've done it. You've done it. We've all done it. We're not immune to it. And just because we did it in the past does not mean that we're not going to do it again. We have to be aware of these emotions. You've been there. You've seen a stock fall. You've had the emotional stomach going, man, is this right or wrong? What am I missing here? And that's why investing is a lonely road. And that's why we sit there and preach community. That's why I invested millions of dollars making our community. So if you want to help mitigate the emotion, be able to bounce ideas off people, that when you're most fearful, people can be there to talk through it, very simple. Just join the community. There's a link below. Join it. It's $7 for 7 days. I'm not asking you to make a permanent, lifelong decision. I'm asking you to make an informed decision. And for $7 for 7 days, you can do that. So click the link below and join. When it comes to housing, let's look at these prices here. This is Case Shiller. This is going back to 1987 when he first started this. We saw this housing bubble right here. And the funny part is, you look at this run up, it's not nearly as steep as this run up. That is a little scary, I'm not gonna lie. And I was sitting there looking at these charts sometime going, okay, what would make this different than this? I don't know. I can honestly tell you I have no idea. I look at inventory and think to myself, this is a big driver of this right here, inflation and inventory. In such a short period of time, we saw these two major factors affect home prices. Now, does that mean there's a permanent plateau here and we're gonna go up from, I have no idea, guys. And I want you to hear what I just said. I have no idea. I'm not trying to sit there and say this is gonna happen in the next 6 months. Are there misalignments between income and values? Yes, there are. Are we at big levels where if you take the average home price divided by the average income, it kind of feels a little icky? Yes, but I want you to remember, when you're watching the data out there, when you see people tweeting about this, make sure you remember, a lot of times they're comparing income in today's dollars to home values back in the day, back in 30, 40 years ago. It doesn't work out that way. You got to remember, you have to compare nominal income from back then. What was the actual income in 1984, not 1984 income in today's dollars. Because when you see that, it really skews the numbers. But in a lot of major markets, there are some big discrepancies between income and home values. That's probably not sustainable. But how will that correct? I have no idea. Does it have to be a crash? No, not necessarily. At some point, there will be a realignment. But you got to remember, there are a lot of people out there with very low interest rates on their loans. I think the low inventory, unless home builders really start pumping out a lot of inventory, the low inventory is going to be here for a while, because if you have a 3% interest rate, you've got to remember that now when you want to move, your cost to own that same home has doubled, more than doubled on interest. To go from 3% to 7%, you're paying over double. That absolutely will affect the way in which you think. My wife and I, we just finished a house. And we moved in. We bought it in July of 2022. And my interest rate, I got lucky, was 4.25, okay, on a construction loan, which was phenomenal. And we joked yesterday because we were looking at our house and how much we love it. We always say we want to be there forever. But I always joke with her and say, what would it take for us to move? And we always throw out these numbers. And there are some ridiculous numbers I throw out there. I go, no, I don't think I'd move for that. But I did say a number last night where I said, I think I'd move for that. She didn't agree with me. She said, well, where would we live? I said, listen, we just buy a less expensive home. We buy a lake house. We buy another home in Dallas, because these are things we want to do. But you absolutely have to remember that I sat there and said, and the reason I would do that is then I would just pay cash for all three homes and not care because interest wouldn't affect me. But if we had to sit there and match exactly what we have, I'd have to take on debt. And then I look at it going, my 4.25 would really jump up there. And on the kind of house we have, that would cost serious dollars. Even though I have the income, I'd sit there and say, do I really just want to pay that extra money out there? And I can afford it, but I wouldn't just pay it just to pay it. Those decisions are affecting me as somebody here who has more than I need to live. And it still affects me and my decisions. And that's why my price would go higher. You better believe if you're making $100,000, $150,000 a year, when you're going from a $300,000 house and the comparable one would be $400,000, $450,000 today, you better believe that's going to add serious dollars because you're not just paying more on that extra 100, 150. You're paying more on everything. And that's something to remember. So I really think that inventory, unless builders suddenly start building a lot of units, I think inventory is really going to drive these prices for a while. We're going to have subdued inventory, in my opinion. Now, of course, I'm also seeing people cry about this. Look at our median home prices. They've plummeted. Yeah, this is the price of homes for sale. And I'm sure it works in tandem, as you see here, as it did in 06 and 07, with the current Case Shiller index. But I look at Case Shiller index thinking to myself, okay, this is a guy who I really respect a lot. He wrote a great book called Irrational Exuberance, where he talked about the dot-com bubble and also did modifications for real estate. Guys, this back here was a totally different time of fraud, manipulation, euphoria. You know, the movie The Big Short really, really hounded on that. I don't see that here. I'm not feeling that here. Am I wrong? Sure, I could be wrong. But I have a good friend of mine named Hesh who owns a great company in Cleveland called Liberty Home Mortgage. And I talk to him every once in a while and say, what do you see out there? He's like, listen, we just sit here and we're getting new buyers. That's our main source, is new buyers of homes, especially young people who didn't even know what 3% was. So it's going to take some time. When you saw interest rates go from 2.75% to 7% in a matter of less than 2 years, that is shocking for a lot of people. But remember, if you're just getting out of the house, if you're getting out of college now, or you're just get 25, 26, starting to buy your first home, you never experienced this. That's it. You just experienced this. And by the way, guys, I want everybody to remember, based on history, 7% ain't bad. And if you saw me in the past, I used to say, paying off your mortgage is a stupid thing. If your mortgage is 3%. When it's 7% now, guys, every extra dollar you pay off here, you're getting a 7% guaranteed return. Where can you get that today? You can't. That's awesome. So there's a positive there. Yes, I know it still sucks to pay 7%, but at least you have an opportunity to get a guaranteed 7% return on your money by paying down that debt. At 3%, I'm like, listen, at 30 years at 3%, you can crush that, even in an overpriced stock market like I think we have. So remember, when you buy a home, you're doing it more than just an investment. You're trying to build a family there. You're trying to build a life there. And that has way more value than just dollars and cents. If you go buy a home and you're going to be there for a long time, but you want to pay a little more, go pay a little bit more for it. It's the home you're going to be in for a long time. Pay down that debt, let inflation take its course. And when you wake up 20 or 30 years from now, you're probably going to be sitting on a house that you've either paid out as zero or has gone up in value, or a combination of both, which is all the more likely. And you're going to do pretty well in that. That's what's impressive about owning a home. There is a lot more intangibles and a lot more emotion involved in that one, and you shouldn't be worried about it. Are there implications in the short run about higher home prices? Absolutely. Absolutely. If you look at inflation, a lot of it has to do with what is housing cost? How much does it cost to live? That's absolutely important. And in certain markets, builders are still building like crazy. They have to keep up with this inventory problem. If all of a sudden tomorrow inventory went up 10x, you'd see an absolute plummet in home prices, is my guess, right? And if you remember, years ago when rates were going up, I sat there and said I wasn't convinced that home prices would go up, mostly because of inflation. I didn't mention the inventory part. I said mostly because of inflation. But I think inventory has been one of the biggest deciding factors. You know, my future son-in-law, he's a realtor here in Cleveland. He just talked about, the other day we were at dinner, he got a call on an offer he put in for a client. The house was $735,000 here in Cleveland. And they said they put a full price offer in, all cash, rejected. Full price offer in, all cash, rejected. Why? Hey, people are giving me at $750 to $775 cash. And that's Cleveland, Ohio, guys. I know it's not the sexiest real estate market. That's Cleveland, Ohio. All cash offer, full price, told no. If I'd asked you to guess when that occurred, you'd have said 2021, 2022, 2006. No, it's 2024, with interest rates being over double what they were recently. Now, guys, there are a lot of fears about the economy and what's going on. I did make a video on my thoughts of the stock market cash, so just watch that next one. I appreciate it, guys.